This episode of Profiles in Risk is sponsored by Insurtech Insights New York City, the largest Insurtech conference of the spring season. Join us on June 5th and 6th in New York City at the beautiful Javits Center as we dive into the future of insurance technology. Use discount code INERDS25 to save 25% on your ticket. See you in New York! Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, fully recovered from my cold that was plaguing me for the last 6 episodes. And today we have with me Manish Khetan, co-founder and president at Xceedance. Manish, thank you for joining me today. How's it going?
Going very well, Tony. Thank you for having me on your podcast.
My
It's
pleasure.
a pleasure. Yeah.
And according to LinkedIn, you are Boston-based.
Yes.
So Boston, we are recording on April 3rd. It is probably really, really nice or a little bit chilly, but starting to get nice.
So for people who will understand this reference, Boston is a part of New England area, and in April you can have any of the four weathers on any of the given day. Today happens to be rainy. Yesterday was really chilly. So the weather ranges from 25 to 65 in a week. So you know what we are dealing with.
Absolutely, completely hear you. So Manish, we always give the guest a chance to give the elevator pitch. What is Exceedance?
Loaded question, Tony. I can obviously go an hour talking about it, but for the benefit of our audience, the simplest way I describe Exceedance is think of us as an insurance company without capital and without distribution. So when you think of the insurance world, there are behemoths in the capital area, Swiss Re, Munich Re, Berkshire Hathaway, and so on. And there are very big players in the distribution world, Aon, Willis, Marsh, and so on. When it comes to everything else in the expense ratio side, the world is very fragmented. You would have very big players in the claims area, actuarial area, some very big players in operations outsourcing, technology services. Exceedance is a consolidation of all of that, and our ambition is to be the biggest player which can impact everything else except capital and distribution. We don't want to take risk on our books, and we don't want to allocate capital to those risks, and we can do everything else that an insurance company does. That's the simplest way I can describe Exceedance.
Okay, so for a giant insurance nerd like me, that's a really weird description. Right? I've got my CPCU, I've got 9 other designations. I am a former middle market underwriter, a former claims adjuster. Uh, I've worked with companies in many different ways, and as a recruiter, I've recruited for many different areas of insurance, of the insurance space. So my brain is like overheating, trying to figure out what an insurance company without capital, without distribution is, right?
So
So yes. So yeah. Help me understand.
think of it like this. When you start an insurance company, and these insurance startups, insurance companies starting up are our favorite clients. When you're starting an insurance company, there are two things on your mind. I mean, first, you secure capital to write risk. You try to build a distribution network, whether it's depending on the business you're writing in, uh, whether it's agents or brokers, you create a distribution network, and then you start to write that business. Once you start writing that, there's a ton of things that follow. You are investing in technology, you're investing in a policy admin system. We operate in property casualty large commercial space. That's the space we are in, which is very aligned to the description you gave about your background. And you start thinking about the technology, then you bring in people to help you write insurance policies. You create a team of underwriting assistants to help the underwriters review risk so that the underwriters can focus on risks that matter and the risks that they really want to take onto their books. And then there is the claims adjustment, claims adjudication, the entire claims life cycle. We have an active claims TPA. We have an actuarial team that can help you with the admitted lines business, register products, create a product for the market offering, whether it's admitted or non-admitted. And basically, everything else that an insurance company needs to do, once they have secured the capital to assume risk on the balance sheet, which is basically writing insurance policies, and once they have a distribution network of brokers or agents to bring risk, which is within the appetite of that insurance company or an MGA, we can manage the entire operation from submissions all the way to renewals, claims, in between, everything in between. So that's the description. Just to give you some context on the markets we operate in.
Okay.
About 65% of our business is in US. About 20% or thereabouts is in UK and Europe, and the rest is in Asia and ANZ. As I mentioned, we operate in property casualty, and within that, large commercial specialty lines is our sweet spot. And today we have about 120 plus clients and about 3,500 people in the team across the globe.
Okay, so the clients, do they tend to be Insurtechs that have one cool thing that they want to do, and then they use you to fill in everything else? Do they tend to be traditional carriers that are looking at new products, or are improving the operation? What's kind of the sweet spot client for you guys?
So let me take a step back. Our client mix is very diverse. We work with Insurtechs, we work with large commercial carriers, we work with MGAs, we work with brokers, and the clients that we have had the largest successes with are, let's say, an insurance. I mean, as an example, there's an insurance company that started up about 10 years ago. We are managing everything for them. Today, they write more than $5 billion of premium. We have an MGA which started about 7-8 years ago. We enabled their end-to-end operations. Today, they are writing $500 million. These are the type of clients that we really flourish with, because when a company is starting up, they don't want to assume fixed cost. That's the biggest challenge that they deal with. Before you even write the first policy, you have invested millions of dollars in technology setups and hiring people and hiring claims adjusters and so on. Xceedance can provide all of that on a variable cost basis. And that's really attractive for companies that are starting up. Now, having said that, we also work with traditional insurers, where a traditional outsourcing model is you have a 50 people team here. We will lift and shift that in, let's say, somewhere in Southeast Asia. It will be 50% cheaper. Be happy. We try to do that, however, with the added advantage of our offices being in different locations. So we can use what we call right shoring of talent. So moving jobs away is not always the answer. Having the right mix of people in the right geographical locations, augmented by technology, is what sets us apart. So the way I would describe this is we are a vertically focused and technology enabled organization. So while we do everything for one vertical, our base is technology. That's really the capsule about Xceedance. Now, one thing which kind of probably is relevant for the viewers is my background.
Absolutely.
And I thought maybe I can take 30 seconds to give a little background.
As long as you want to.
I mean, once after doing my MBA, I started my career as an operations and strategy consultant, and I've had 3 different startups, one in the fast food space, one in insurance pricing and selling insurance online space in India. And then one was my own consulting company. All this was before I got a call from Berkshire Hathaway back in 2010 when they were starting their businesses in India. And I, along with 2 other people, were hired to help set it up. Arun was the CEO. I was running operations and business development. And we helped set it up. That was the first foray of Berkshire Hathaway in India. When that company closed down in 2013, I believe we got some good cred with the group, and we started Xceedance, and Berkshire became one of our first clients. And that really kicked off the journey. So the roots of Xceedance lie in insurance. The executive team that co-founded Xceedance has insurance backgrounds. We are all maybe not as big as you, Tony, but we are a decent enough insurance nerds. And that's the route, those are the roots with which Exceedance was founded. And therefore, we have stuck to what we think we know. We know insurance, and our focus has, the strategy has always been to be vertically focused and technology driven. And luckily for us, we don't have the legacy of being a 20-year-old organization where when you introduce technology, people's jobs are at stakes, etc. So we have been able to do very well in balancing that.
Okay, fantastic. The website says 500 plus certified insurance professionals. So I'm very involved in the education side of insurance. What do you mean by certified?
Good question, Tony. I think uh, if you ask me, certification is not a proxy for knowledge in all cases. However, that creates a path of structured learning, and we encourage our team to follow that path. So we in our team have AINS certified professionals, CPCUs. We have qualified actuaries who are in different stages of their qualification, as in the actuarial exams, you have to clear multiple exams. UK Actuarial Society or the American Society of Actuaries. So when we say certified professionals on our website, we mean professionals who have pursued learning to the point where they have cleared these exams and got certificates.
Perfect. So industry standard certifications, which, by the way, 500 out of 3,000 employees is a very high percentage. Most carriers in the States are nowhere near that when it comes to that percentage of people that have an insurance designation. So in fact, the number that generally gets shared by the institutes that does CPCU is that 10% of insurance professionals ever take a single test, only 4% get CPCU. So 500 out of 3,000 with some level of certification, that's fantastic. So on the website, so you guys divide it basically into 4 or 5 services. Okay,
Yes.
so life cycle operations, and that touches operations in anything, basically. Yeah. Underwriting, policy service, billing, finance and accounting, contact center, print and distribution, which is random, and on-demand support. Then the claim and TPA side, and then again the technology side and the data analytics side, both of which have a whole bunch of services under them, and then the consultancy and advisory side. So yeah, basically when you say everything other than distribution, and sure that can provide a capital, but basically, so truly what it looks like. What it looks like is a buffet of basically any services that you might need to stand up or improve an insurance company, short of selling the policy and finding the capital to be able to back up your operations.
Yes, I would say it in, I mean, exactly what you said. I would just say it in slightly different fashion. Think of us as a three-dimensional service provider, right? So it's one dimension is geography, whether it's US, UK, India, Australia, etc. We have an office in Poland, for example. Then think of line of business, whether it's property, casualty, excess and professional lines, and so on, inland marine. Take that line of business, and then areas of expertise within each line of business. And this three-dimensional matrix allows us to focus on not just hiring the right individual, but also train them. And industry certification, yes, it looks like a high percentage. Honestly, we can do much better than that. And I can tell you that number is a conservative number because those are the people who have cleared the exams. There is at least 3 times as many people pursuing those exams. So from our perspective, it should be a whole lot better. So in that three-dimensional matrix, I reference to a term called the right shoring model. So the goal is to find the right talent in the right geography. You kind of reference print and distribution. Print and distribution is an example which has to be in the same geography. for a motor insurance renewal notice, etc., or notice of cancellation or claims process, if any printed letter has to go, it has to be in the US or UK or Australia, where that letter has to go. So call center, we don't believe in having people work night shifts. We try to keep them in similar geography so that they can understand the language and the culture. When you're calling to report a loss, whether your car was in an accident or your home was damaged, the last thing you need is somebody who cannot even understand your accent. So those are the things that we care about when we decide which dimension of that 3D matrix is we identify people and their capability to address the needs of the customer. You use the word buffet. That's one way to describe it. I mean, we are not uh, proud enough to say we can solve every problem in the world, but at the same time, our client base is a mix. There are few where we work end to end, and there are few who use us for specific services, whether it's technology services, whether they license one of the technologies we have built, whether we provide them resources to manage their statutory reporting, or we have a full blown claims TPA. So it's a mix of type of clients that we have.
Okay. The So again, looking at the website, so you guys serve insurers, reinsurers, MGAs and program administrators, agents and brokers, truly like the entire chain. Now for agents and brokers, because you said at the beginning that you guys don't do distribution. So what kind of partnerships do you have with agents and brokers?
So, without naming names, I mean, we have a relationship with one of the largest brokers in the UK market. And uh, as a broker, as a large scale commercial broker, there's a lot of work that goes behind the scenes to make that operation work, just as the way it works on the insurance company side. The ledger entries are opposite, I guess. An insurance company pays the insurance company gets money from the broker pays money to the insurance company on behalf of the insured. So there is a whole lot of activities that happen where money changes hands from the insured to the broker to the insurance company. A policy document has to be issued. There is negotiations on quotation documents, on coverages, endorsements, policy forms, and then during claims, these brokers help the insureds to follow the claims process. So coordination with the brokers in terms of claim settlements, etc. There are regulatory reportings and filings that brokers have to make in certain geographies. So there is a whole lot of operational element involved, while the brokers don't necessarily have to review the policy or issue the policy themselves. They are representing the insured in front of the insurance company. And therefore, a lot of operational steps go behind the scenes to make that happen. Those are the things that we play a role on, and everything is obviously augmented by technology. And I don't mean to repeat the point of it's technology enabled. I mean, everything is technology driven. I mean, talking about AI and generative AI, etc., is a whole different thing and might take up a lot of time depending on how much time you have. But bringing in the right set of technologies to make the operations efficient is where our strengths are.
And you, if I understand correctly, you don't have your own platform, right? You're not one of the 2,000 technology providers serving the industry right now. So you don't have a horse in the race, right? You can help us figure out the right technology to bring in as a consultant.
Yes, absolutely. We are technology agnostic. We have partnerships with certain technology providers. However, over the last 10, now 11 years, we recently celebrated our 10-year anniversary last year, which is amazing.
Congratulations.
Almost 11-year-old organization now. The one thing that we take extreme pride in is to say, don't work with us. When we feel that we are not the right fit, that's the thing which we take extreme pride in. That we do have some platforms, we do have some technology tools. We have technology tools that we feel are very robust and solve certain problems to a degree of efficiency that big tools can sometimes not. But at the same time, our consulting team's remit is to be unbiased and give the right advice to the client that we can stand behind. And if the right answer is don't work with Xceedance, then the right answer is don't work with Xceedance.
So that's very interesting. What kind of organizations are not a good fit to work with you guys? Is it generally too small, too old-fashioned, your technology is so far behind, too unwilling to change? Which ones end up not being a good fit?
It's an evolution, Tony, right? So when we started Xceedance, we a lot of these big, large scale RFIs, etc., or RFPs that need an organization to exist for 5 years, and therefore we did not qualify. As we breached that mark, we started to qualify, but we have stayed away from a cookie cutter. Here is a team of 300 people, go and do this from a remote location in India or Philippines or somewhere and give me a 60% cost advantage. We have traditionally stayed away from a very basic copy paste type work. We will not say, I mean, it's not like we are against it, it's good work, but we feel when an organization is very strict about moving everyone from one geography to another, we feel that the right skill set cannot be applied to bring in the level of automation and technology. The 3D metrics that I referred to, we believe when an organization is open to ideas around right shoring of talent, where there is a good mix of people in the geography with some element of offshoring, and they are open to technology interventions, that's where we win. Our endeavor is always to make it a variable cost model for the customer, so that, I mean, I like to use this phrase, when you're buying soap, you don't pay for glycerin. So when you're when you're trying to get the work done, you pay for transactions. Why do you worry about whether 10 people is what you're paying for or 20 people is what you're paying for? Per transaction is what matters, and that is what we bring in as an efficiency. And that's sometimes there is less acceptability to the fact. There's always in the world of Insurtech startups, you would know this as well as anyone. There's always big ambition not backed by a good plan. And sometimes we feel that while the ambition is good, we don't see a solid plan, and therefore putting our services behind that business model is not a good fit. So sometimes we shake hands and say, you know what, we don't necessarily believe enough, and therefore let's not go down this path. And sometimes price becomes a factor. But I mean, not very often, but sometimes price does become a factor. And we say, you know what, it's okay. We'll help you find the right partner if you want us to. But if that's not something that is palatable, it's not. So it's a mix of factors, Tony. I mean, I'm sure this is nothing unique. Many organizations go through similar things, but I guess we follow the same patterns here.
Okay. So given the many different areas of the industry that you guys serve, I am very curious on what you are expecting to see in the next 2 to 5 years when it comes to technology in our industry.
Oh boy, do you have 3 hours? Okay. So, I mean, Tony, see, technology is evolving at a pace which is making 5-year-old investments legacy already. And I know large language models and AI and GPT models are the rage here. Machine learning is the rage, but it's nothing new. I mean, machine learning has been there forever. And in the olden times, there was a team of people sitting and mapping images of car crashes and training the model to then machine learning predict what the next image looks like. Then it evolved into something called word to vec. It was creating vectors for words and then creating contextual meanings to words in a sentence. For example, take this carton of milk and pour it in a glass till it's full, or take this carton of milk and pour it in a glass till it's empty. And the vectors are full and empty, and it is referring to the carton and the glass. So that technology changed the game from training the model to creating vectors which already exist. Then the large language models and evolved into something called a transformer model, which is basically neural networks, which uses word to vec in combination with large sets of data and creating a pre-trained environment of information sets. And that's the next evolution. Somewhere along the way, there were technologies like blockchain. So over the next 4 to 5 years, I think a combination of these large language models and the transformer models in particular will create a lot of momentum shift in the industry. And I say that because of a few factors. One is historically, the technology advancements have been for the institutional buyer, like a blockchain technology or a policy admin system. The decision has to be made by the institutional buyer or B2B buyers. Technology like GPT or Alpaca or Llama, etc., any of these large language models, a consumer can use them and see how it makes my life better. It's almost having a smart assistant for everyone out there. And that is changing the way people are thinking about day-to-day problems, which is forcing organizations to think about how to make these problems go away at a much larger scale. We invest heavily in the Azure version of these models. And over the next few years, what it should do two things. It should expedite how you create a more positive impact on the expense side and allow underwriters to write more business. And how it can help these two things is, as an underwriter, I get 20 risks to evaluate. I spend time to evaluate all those risks. And this is an experiment that we did actually. You hire an underwriting technician and you train the underwriting technician to identify certain factors and flag risks that we should stay away from so that I can focus on things that matter. Training a model was less than a day, and it started giving things which matched the personal evaluation more than 90%. And as an underwriter, if it allows me to do those evaluations 3 times as fast, theoretically, I can write 3 times more business. Theoretically. Now, is there 3 times more business out there, which is within my appetite, within the price that I'm looking to get, etc.? That's a different discussion. But at least it allows me to look at more. It makes my underwriting team more efficient. So these kind of things will start to come into play. Loss adjusters are reviewing losses. And the first thing to try to look is, are there red flags here which make me believe that this is a complicated case or this looks like a straight through case? Now, if I'm able to train this assistant to help me make those evaluations, the first set of evaluations faster, I can be more efficient at my job. I can do a much better customer service, which will in turn lead to a much better renewal rates next year, which leads to a better top line for the insurance company and therefore leads to a better outcome for the insurance company. So over the next 3 to 5 years, in the short term, I think a wider adoption of these technologies, which allows individuals to do their jobs better, therefore leading to a better outcome for the insurance organizations, is probably what we can expect. I'm not really talking about wide scale innovations and new insurtechs coming up. I mean, those things will happen, Tony. Just like anything in the next 12 to 24 months, I truly expect a few startups to come up which will say, we don't need underwriters, our AI can do the underwriting. And in the next 5 to 6 years, I expect a lot of them to fail too. But the fundamental philosophy is having a smart assistant who can make you more efficient at your job is now a more easily accessible tool at a few dollars a month rather than investing in $1 million industry-wide application. So that's the biggest difference.
All right. Lots to think about here, and we sit at a point where the industry is seeing serious challenges, right? So we've spent the last 10 years investing in our technical debt, trying to catch up.
Yeah.
And now we are challenged by loss ratios, by climate change, by regulatory issues. It is an incredibly challenging time to lead an insurance company. I am personally so glad that I kind of chose the alternative path and became a commentator and supplier to the industry, didn't follow the path that I originally thought I was going to follow to run an insurance company, because it has gotten really, really hard. All right. Anything? So normally I ask what new features are coming, right? But normally I'm talking to an Insurtech that has a platform that does something. You guys are basically advisors and consultants. So in your case, is there anything? Is there any expansion that you're expecting for Xceedance in 2024? Any new services you're going into?
Okay, so I'll just try to expand on. I mean, we believe in the right shoring of the skill sets that matter the most, right? So by definition, we are always expanding. For example, we have offices in Poland to cater to language needs in Europe. We are looking at possibly other countries in Europe. We have offices in Australia. We have offices in India. Asia is the next logical expansion in that area. UK is a big office for us, and Ireland is an upcoming area of focus. US is fast growing. So geographically, our footprint is following the natural next steps. Capability wise, we have invested heavily in our actuarial and claims TPA businesses over the last 2-3 years. We have invested heavily in our data and associated services in the last 2-3 years. And these have started to truly differentiate us from being like from a regular service provider to a truly one-stop shop for every insurance need. And traditionally, these services are very specialized. A company will do a claims TPA business, will not necessarily do everything else, and so on. So these are areas which we are investing heavily in. And then expansion of each of these capabilities across the globe. So right now, for example, our claims TPA focus is in US and Australia. Next steps is UK. Our actual business is Australia, Asia, UK, a little bit in the US, maybe expansion in the US. So it's just expansion of capabilities into different geographies. So just filling out the dots in that 3D matrix, so to say.
Yeah, totally makes sense. You're doing everything you want to do, but you're not doing it at the same depth in
exactly
all the geographies
and
that
in every geography. Exactly. So we are just trying to be true to the course that we have set ourselves on and keep expanding, basically.
Very, very cool. I've got to say, you guys have been very visible in the Insurtech conferences over the last couple of years, and I had no idea what you actually did. So this has been super, super, super interesting. Thank you so much for your time today. For the listeners, I will tag you and the company on LinkedIn when this goes live.
Mhm.
And like I said, it seems that I see you guys at all the major Insurtech events. So for the listeners, stop by at Insurtech, Hard for Insights, ITC. And again, thank you so much for your time today.
Tony, thank you for hosting me, and obviously you're being incredibly kind. One thing which I'll say is we love conversations. Doesn't have to be a potential business opportunity. We love insurance conversations as an organization. More than happy to have any conversation for anyone that is interested.
Perfect. Thank you.
Thank you, Tony.